So what you're looking at there, the one on the left is the silver prices from, it looks like the early 90s, and then the one on the one on the left is the spot price, the one on the right is inflation adjusted. Now, as you see on the left, the price, way back when was it was pretty up and down, for a long time. And then I think that as inflation has started to lose its ever-loving mind, obviously we see that it has gone up in price. Now, when you look at the inflation-adjusted price, you see that, yes, it actually has kept its own against inflation. The price has gone up in relation to inflation. Now, I made a video yesterday about buying on the dips, because the way you beat this even better is to buy when it's low. So say the price is riding up, it's riding this line right there. Well, if you can get on each one of these dips, and it is possible, all you got to do is watch the spot price every day. Can you look at the spot price, kitco.com. So kitco.com, you check this day, and you see it's there, and then when you see that it dipped down to there, then that's when you would buy. And then see how it spikes back up. That might be when you say, oh, well, I just made a bunch of money, let me dump it, or swap it out for some gold or whatever. And then it starts coming back down, and then you start looking at, okay, well, do I buy again? Is it worth buying? Because that looks like about a $5 or $6 difference between there and there. That is a huge damn difference. You could have bought there and then gone up. You can play these, but over time, the safe way to do this is just whenever you see the dips, if it's riding all this, and then I think I'll go ahead and buy some now, and then it goes back up, and then it comes back down, and you're like, yeah, I think I'll buy some. So if you had bought here and here and here and here and down here and here, and trust me, I know because I've been doing it for a long, long time. My silver that I have from years ago, I don't have anywhere, I've got a very low overall average price. That's why even today I can buy silver, because I know that after all these years, I'm not going to drive that average up that much unless I do something really stupid like dumping $100,000 into gold or into silver at $50 an ounce. And even then, I'm not real sure how that would affect the my average spot price. But as you see over on the right there, it has held its own against inflation. It drives me nuts when people are saying silver doesn't even hold, it's not even working against inflation. It's holding its own against inflation. If you go back to 2000 there, early 2000s, and you see, here, and you see that it's rising up, even if it was, so with inflation, it should be dead flat here, if it's not going up above inflation. Well, as you see over here on the left, the price spiked up into the high 40s. Well, that's right here. That means it's way above inflation. You look at over on the right again, and you can see that, yep, it's way above inflation. So this means that if this were just riding with inflation, this line should be straight all the way across there. It shouldn't be bumping up or bumping down if it's riding just, say, with inflation. But it has increased against inflation. The most we're hoping for is that it just holds with inflation. With this metals, you put your money in the bank. You put your money in a savings account. What's going to happen? It's going to deteriorate. If you just put it in one of these junk savings accounts these days, they're not paying anywhere near what inflation is. You're losing money. We had a 9-point-something inflation rate. That was the accepted inflation rate here in the last few years. But it was actually way above that. It probably was closer to 20%. Okay, so we'll just call it the 9.3%. Let's just call it 9% to be generous to President Biden. 9%. So every $1,000 that you had in the bank in that year lost $90 of value over the course of that year. $90. Almost 10% of your money is just boom, poof, like a fart in the wind, gone. And you didn't do anything. You didn't spend it, you didn't touch it, you know what I mean? It's just gone because inflation is eating it away. And so when you're buying the metals, what you're hoping to do at the very least, is just beat inflation, right? If you can come out with your money having equal purchasing power at the end of the game with the metals as opposed to keeping it in a bank account, you've done all that you needed to do. So when you start this crap of, well, if I put it in the Dow Jones or I put it into Bitcoin, well, go ahead and do that. Go ahead and do that. Nobody's stopping you. Do that. More power to you. That's me clapping. Go ahead and do it. I choose to keep my money in metals, right? If I'm coming out just with inflation, I'm happy. But this right here shows that silver, yes. If you look up at the top there, you can see it says inflation adjusted. Okay, this was the inflation adjusted chart. It has held its own and actually beaten inflation over the years. Period. But if you were to say, now if you're buying on, say you're buying it every week, and you're getting all this, you're buying the same amount every week, you're buying the exact same amount, you're going to just ride that chart there, and you're not going to have come out, because if you're buying up here, you're you know what I mean, you're spending more than you needed to. If you're buying on all the highs, well, inflation is going to kill you. If you're buying on all the lows, like if you just were to take and just ride on all this low stuff here, you're buying there, well, now you're doing better than the chart. You're doing better than the inflation. You're going to come out even more ahead, and it might be 20% or 30% better than you would have if you had just kept buying every week like some people do and spending money on the even on the highs, on the lows, but even when it's, you know, a mid price or a high price, you're still buying. Yeah, that's not the way to do this. You can buy a piece here, here. You can buy, you know, an ounce, but you should be saving your money to buy on these dips so that you are working this spot price out in your favor. And this is what I do. I'll let money sit in the bank. I'll buy a little bit here and there, and then I'll keep, you know, thousands of dollars in the bank, whatever amount it is. I mean, it's different amounts at different times depending on how quick these dips happen, and it also depends on my mood. I went quite a while without buying anything, and I missed out on some prices because I just had a little bit of burnout or something. I just wasn't interested as much. And if you want to stay diligent, you know, you're watching this and you can catch this on these lows, and then you end up beating inflation, and that's the best way to do it. You know, you're not just riding the inflationary wave here. You're actually catching, you know, you're catching that undertow or whatever, and you're going to get down below the inflation level, and you're going to have a much better result at the end. You know, which that's what a lot of us try to do too. Or cost averaging is what we call it, where we're just trying to bring the average cost of all of our metal down as low as possible. And the way you do that is to buy there and there and there and there and there and there. That's the way you do it. You'll have a great day.